How do you get a small business loan with no money? And this is a very common question, very tricky, in fact. First thing that I want to offer out is that you can borrow money from yourself. If you have a retirement account, like a 401k, you can borrow up to 50%, maximum of $50,000 from your 401k. And so you can loan the money to yourself. This is actually a better deal than it sounds because you're not really paying penalties and you're just borrowing from yourself. So that is what I would start with. Another option is a home equity loan or a HELOC loan, home equity line of credit. And again, you are borrowing from yourself, although this is not as good as a 401k. You might have more money available to you in this way, but also too, you're going to be paying interest to the bank. And so that does kind of stink. You might also pay a higher interest rate than if you did some of the other options out there. If you have family members or friends with money, you can borrow money from them. And in this case, I would suggest talking to a lawyer like me to put together basically an agreement that you would pay them back so that no one feels tricked. And it's not very expensive or difficult for us to do this for you if you want to do that. Another option that you can get is you can look for an SBA loan. SBA loans are done through various lenders, and there are multiple lenders. So you can start with your own bank, but you can also go online to the SBA government website to find a way to apply, and they'll send you a list of vendors who are interested in your loan. And the nice thing about SBA loans are you do have to put some money down, but the government, the SBA, encourages banks to take chances on businesses that are growing. And so because the government takes some of the risk of you failing, then that encourages banks to take a chance on you. One of the side benefits of doing the SBA loan is you're going to work with an advisor with the SBA, and they're going to help you make a business plan, which actually increases your chances of succeeding, and therefore that alone can make it worth doing. Then you can also do more traditional things like using credit cards, kind of expensive and a high interest rate, or working with your bank. If you've had a long history, a long reputation with your bank, and you have assets outside of your business, the bank is more likely to work with you on that. It can be tricky because new businesses and businesses that are like 2, 3, 4 years old, they don't really have a lot of credit rating, which is actually kind of a myth anyways. There's not exactly a credit report for a business, but they have less credit history, and so lenders are a little more hesitant to lend to businesses. The last thing I want to talk about is if your goal is to work with a vendor, like maybe you need to buy food for your restaurant or tools or something like that, you might find that your vendor is willing to lend you money, which is called net terms. I'm putting quotes around that. Net terms are basically an agreement that you can borrow money from your lender. From your vendor, so that you can buy stuff from your vendor and pay them back later. This is good for things like inventory, because if you need to stock your shelves, you borrow the money from the vendor, you sell the goods, and then you pay the vendor back, and then you get more goods and you sell them. So these are the ways that I would start with. And then if you need help with I am Matt Newsom with Sturge Business Law. I'm an attorney, and I help small businesses launch, grow, and succeed. Later.